as a trader, it's either you spot the liquidity or you become the liquidity. Nothing much, nothing less. So hello guys, welcome. In this video, I'm going to share with you a step-by-step guide on how you can actually identify liquidity for those that are trading my liquidity supply and demand technique. Now, when it comes to trading, there are so many levels in the market for you to identify. There are so many support and resistance levels you can identify. There are so many supply and demand you can identify. There are so many fair value gaps and so many that you can identify in the market. But the truth is that most of them are actually liquidity, and that's one reason why you haven't been getting decent reward for trading those levels. And in this video, I'm going to break down to you a step-by-step guide on how you can actually identify liquidity levels when you are trading. Now, this video is majorly tailored to actually focus on those that are trading liquidity supply and demand system. Like if you are trading supply and demand liquidity system, this video is specifically tailored for such people. However, if you are not trading that system as well, there's no problem as well. You can basically learn it to get an idea of how it is and probably try to use it to adjust your own system as well. At the end of the day, it might be the same things because you see the same levels in the market. Now, with this idea, without taking much of your time, hello guys, welcome to my channel, welcome to Forex Trade. On this channel, I mainly focus on how you and I can actually grow as traders. So if you are a trader, if you help me do the YouTube business, smash that subscribe button and also join my Telegram channel. The link will be there in the video description. Now, with this said, let's get straight on my laptop. Let me take it straight and then share with you a step-by-step guide on how you can identify liquidity levels in the markets. So hello guys, now that we're on my screen, let me share with you what exactly these liquidity areas actually mean. Now first, let me break down the idea of liquidity to you. Now, liquidity in simple terms simply means free funds flowing in the market. Now, using real economic terms, liquidity is simply, let me say, more cash being thrown into the market to actually make the market move to a particular direction. So for a market to be able to buy, first of all, it needs to sell to go grab the sell side liquidity before it finally buys. And for a market to buy, it needs to first of all, for a market to sell, it needs to first of all go get the buy side liquidity before it finally sells. Now, with this long explanation, let me actually break down this to you in simple terms. Now, for example, if you are trading supply and demand, a typical liquidity level could be, let me say, for example, you are trading supply and demand, and then you have a setup like this. Maybe the market came here, gave you this, came here, and then so it's currently stuck here, and you are left like this. Now, when you have a market like this, in a supply and demand system, here becomes your demand, all right. Now, when here becomes your demand, here, over here, which is this top demand here that the market also created at the same time, this top demand here becomes your area of liquidity. Now, if you are trading supply and demand and you've been identifying these areas without marking out an area of liquidity, you and I will realize that in most cases, the first demand you identify, which was close to the market, often get broken. Now, the reason for this is very much simple. The reason it always gets broken is because that's just a liquidity level. The market is just waiting for a lot of people to set in their orders, like a lot of newbie retail traders to set in their orders at that point so that they trap them out immediately. Now, this is not only the kind of liquidity level we have even when you are trading supply and demand. Even support and resistance levels could be areas of liquidity. So for example, let me say a market is moving in this manner. Let me bring it a little bit close down here. Let me say a market is moving in this manner. It comes here, goes here, comes, goes, taps here, go back here. Now you see, this is a clear support and resistance, all right. Let me get a drawing right again. So market comes here, goes, comes, goes, comes, goes. Taps here, get back here, come here, forget about my drawing. So now, for example, here we know that this down here, which is the lower part here, is actually a support level, and then this top side here is actually the resistance level. Now, in the actual sense of trading, we all know that a resistance level is a level that we should be selling from, meaning that there are a lot of retail traders who learn the basic of support and resistance and will be willing to place their sell orders right here. They'll just keep their sales right here, and then keep their take profit here, probably their stop loss just a pip just some few pips above the level right here. Now I am saying this not from a point of research, but from a point that I have personally felt myself when I was trading support and resistance back then. Even in our trade support and resistance, but I've been able to identify the errors and fix them out. Now at the same time, we also have traders that also will be willing to buy from the area of support right here, and then their target will be this top here, and then their stop loss as usual will be down here. Now this is where the idea of liquidity comes in. So for example, presently this market is at an area of support, which simply means that what the next target is moving to the area of resistance. So let's focus on the area of resistance as an explanation in this video. Now in this scenario, since this market is coming here, a lot of people are placing their sell orders right here. Now this is what the market will actually do. The market will take as much time as possible to slower down within this area here. Now the purpose of this slowdown is not for anything special. It's simply for them to gather enough orders around here, because if there's enough sell orders pending around these areas here, it basically means that what there are a lot of stop losses at this top here above the resistance level that the market will actually sweep before it moves down to its original direction, which is moving down to the sell side. Now this is one thing you need to get notice of. So instead of waiting to sell from this exact resistance point, as a smart trader, you should look for a level, probably an order block, a supply level, or a fair value gap, depending on the pattern you trade. For me, I'm a supply and demand trader, so because I don't want to get things complicated. So I'll basically just look for a supply level right above here and wait for the market to come there, because I know that there are a lot of support and resistance traders out there that don't know the full details of actually trading support and resistance. So they've packed all their orders around here, meaning that this top becomes their liquidity for the market to actually move. And the truth is that the market will actually come and sweep at this area before it starts its movement. Now, too much explanation. Let me show you a typical one on my setup on US oil. So I'll take a look at this trade on US oil here. You can see clearly that here is an area of support and resistance being created. You can see this top here was a resistance area. You can see there's so many times the market tested it, and then this lower part here became an area of support. Now if you take a look at the market clearly, what the market actually did here, you can see that I had my supply right at the top here. Let me zoom into it. You can see that here was my supply level right here. The zoom was too much. Here was my supply level, which is this last bullish candle before this bearish candle becomes my supply candle. Now why did I pick this supply candle instead of entering the trade from this resistance area directly? Now clearly I know that this resistance area is filled with a lot of stop losses from traders that are new to support and resistance trading, meaning that the market will be targeting them to get them out of the market before it starts its actual movement. So as a smart guy who knows the game, I basically identified my supply level here and waited patiently. Now let me show you the date where I identified that level. So if I should go back right now, I identified the level after the market created this area here. So that was basically, let me look at the date it created this area. So that was November 24th. So from November 24th is when I've been waiting for this setup, and I eventually got a trade on this was not, let me look at it. Okay, November 27th, and I waited for 2 days. No, not 2 days actually. Here's when I took the trade. Okay, November 29th, 4 p.m. That was when I was able to take the trade. Meaning I waited for 2 solid days plus few hours before I was able to take my trade. Now, why did I wait this so long? Because I know that eventually one day the market is coming to sweep at this area. So assuming a lot of beginners got into this market here, which they definitely did, getting into the market at this area of resistance here, that basically means that they have their pending orders right here with their stop losses right here, because there's no one coming to place trade here and they keep his stop loss above here. It doesn't make sense in the first place. So they probably have their stop losses here, and then they take profit targeted around here. And look at what the market did. The market came here, actually gave them a confirmation that the market was going bearish at this point. So a lot of them would have gotten in here, and look at what the market did. It eventually swept them off before it went down. Now take a look at the difference between what the market did here and when it came to the area of supply. Now you see, when the market tapped the supply, look at how it moved away from it. Now there's no doubt how, just take a look at how it moves away from it. This basically means that what the top of this resistance is actually a liquidity level. So now if you are trading support and resistance or supply and demand, and you see a resistance level or a supply level, look closely around, then you are definitely going to see a supply or a demand. Now in case you don't see any of this, you basically don't take a trade from there. Now let me show you something else again. So here is a supply right here, a demand right here. Now this demand here is being covered by this area of long awaited support here, and take a look at what the market is doing here. Now personally for me, I'm never going to take any trade at this point until the market comes back to test this area or create a new level here. And if you look at it carefully, after the market broke the resistance, it did what? It also came and break the support level as well. So this basically means that what areas of support and resistance are actually areas of liquidity that you need to get aware of. And the reason for this is simple. The banks and the institutions, they know that what a lot of new traders will fall into this trap by taking limit orders from this support or resistance areas, as they often call it sniper entry. And I say sniper entry to sniper poverty. And on the other hand, smart traders will never do that, because they'll basically wait for the market to give them a supply or demand level. And let me tell you, the market moves in support and resistance, all right, but before this market moves in support and resistance, it creates what we call supply and demand, because economic is all about supply and demand, and not support and resistance. Support and resistance are basically cage movement whereby this market just fluctuates up and down. The main levels that the market actually trades from are areas of supply and demand. Like other blocks are basically supply and demand. Even fair value, you can look around fair value gaps clearly. You see that what it often tapped into an area of supply and demand. Now I'm not saying those strategies don't work. They work, but at the end of the day, majority of us end up trading supply and demand quoted in different names. Now let me show you another trade that is currently run. This is a trade that has already hit TP. Now let me show you another one. Take a look at this trade here. So over here I showed you which sort of stop loss, which sort of liquidity. Over here I showed you a liquidity in the form of support and resistance level. Now let me show you a liquidity in a form of supply and demand. Take a look at this one here on Euro Aussie dollar. Here is my demand level right here, and in front of this demand level come another demand level right here. Now take a look at what the market did with this demand level. The market actually tapped into it, gave the usual confirmation, but as a smart dude, I never got in. He gave the confirmation, all right, and then if I wanted to trade it based on my confirmation, meaning immediately he gave me this bullish candle here, I would have taken it here and then targeted this high over here. But now as a smart guy, I know very well that what this is just a liquidity level that the market will play with and then break below it someday. So I had to wait and eventually take a look at what the market did. It eventually played around it for a long period of time, and then boom, it broke below it, tapped into this area, and then bounced off. And I took my trade from this area as well. Now for those of you who took my signal from last week as well, I'm not sure I still have those set up here. If you took my signal last week on GBP JPY as well, you know that what I had a similar setup. Like I basically have same setups over and over again. So now the idea of this video is to tell you that what when you are trading, whatever system you are trading, know that there's always a liquidity pool sitting in front of your entry. So if you are trading supply and demand, always look around for support and resistance areas, because those areas are liquidity, meaning that what once the market break those areas, they will respect your key level. But in a scenario whereby they don't break it, just patiently wait for the market to come over there. Don't rush and take trade in the market. Now if you are doing any setup, maybe you are trading supply and demand, support and resistance, and then you don't identify any area of liquidity in the market that is an actual area of liquidity, then know that you are in a big trouble. Now going back on this video again, let me show you something again. Know that what around every support or resistance you see in the market is blocks of liquidity. Here is a resistance, the top is actually an area of liquidity, no matter how you want to back it up. Here is a support area. This area here is actually area of liquidity. Liquidity is simply free money in the market, and our stop losses are free money that are in the market that we want the market to take. That's why we set the stop loss, because we want the market to take them. Here is the same thing as well. Here is what a liquidity is demand level here, and clearly I know that behind this demand level is a liquidity pool, so I'm never going to fall for that trap thing as well. Now this okay, this is the Telegram community. So this was some trade I took last week. GBP card. Okay, take a look at this one here on UK 100. I've actually cleared the setup. so I can't actually zoom into it that much. Okay, here is it. I can zoom into it. Take a look at it here as well. You can see, let me just zoom to maximum. You can see here was my supply level here, and at the top here you can see the market created this high here, and I clearly know that what this double top here, you can see there's a double top formed around there, and that double top is actually an area of liquidity as well. So I had to wait for the market to break it before I take my trade. And take a look at it. It was a sweet one and actually went to hit my TP. Now let me go to UK 100 if I still have the setup mark in there, because I usually clear my setup after documenting them. Okay, so it's no more here. So next up, let me take a look at another setup. So here was our UK 100, our GBP JPY as well. Take a look at it. We had a supply right here, and then the market gave us another fake supply right in front here as well. Take a look at here, this blue candle here around where my marks is right now is another fake level that the market created, and eventually the market came here, tested, pushed back a little bit, and then eventually came to our actual level, and then we sold from there and got almost over, that's over 200 pips if I'm not mistaken. Our entry was around 192.389, and I asked everyone to close off when the market dropped down to 1:6 level at 190.678. Now let me actually take a look at it on GBP JPY. So I actually dropped free signals in my community. You can check it out if you are interested. Okay, so here was the setup. I cut it right here. Yep, here is it. Yep, here was our entry. And then our stop loss was around this top here. Wasn't that much. Our take profit was down here. Let me just modify it to 678. Is it 678? Yeah, 678. So 678. Okay. Nope, this didn't give us a 1:6. The actual setup was a 1:6, so I don't know how I actually marked this routine again. Let me just take a look at it again. Where I entered the market. Entered at 192.389. $192.389. Okay, entered. Okay, that is it. We entered at the top there, so which gave us a solid 1:6. And let's take a look at how many pips we caught here. You can see a solid 170 pips, and we had the trade for just 2 days. Yep, we had it for 2 days. I vividly record that it was 2 days. Yeah, not up to 2 days, 23 hours. So now this is basically all I have for you here. So remember what I said in the intro. If you can identify the liquidity level, know that you are the liquidity in the market. So whenever I identify supply at demand level, look closely if there's a double top being formed around there, or a support and resistance, or look for any other key factor there to identify your liquidity level, because your liquidity is always around those levels that are close to supply and demand levels. And at times it could be a supply level or a demand level. So I always advise that if a supply, if your demand level is close to under demand level, and the difference between two of them is now up to 30 pips or more, stay clear of it, because it's likely to be fake. That's just how I've backtested my data, and I've gotten them over and over again. So see you in my next video. Hope you find this one helpful. If you don't understand anything, you can join my Telegram channel and ask me. And for those of you who are new here, in case you are wondering which broker I'm using, for my broker I use Exness, and then prop firm I'm using Blueberry Funded. The link will be down in the video description. You can use my link and I get up to 25% off you with my discount code, which is known as what, PT25. So see you in my next video. Bye.